Hello friends, I welcome you all in one more knowledgeable interesting video. Today in this video we will going to talk about a very interesting case law of Honorable Supreme Court of India in the matter of CIT versus Mansukh Dyeing and Printing Mills, Civil Appeal number 8258 of 2022, and the date of judgment is 24th November 2022. Yes, a very interesting and very important judgment of Honorable Supreme Court of India, and I will going to tell you the important aspects of this important judgment of Supreme Court of India, because this judgment is highly relevant and very important for partnership firms, accounting of partnership firms, impact of revaluation of fixed assets of partnership firms, right? So from that point of view, from that angle, this judgment is extremely relevant and important. And further, we also talk about section 45(4), right? What the amendment said, the amendment that happened on 1st of April 2021, right? And what was the situation before amendment of section 45(4), right? Then I will going to tell you that what are the important aspects of revaluation in a partnership firm that may make an event taxable, right? So let's first understand it with an example, right? With an example that what was the practice that partnership firms were doing and how EO caught that partnership firm. And interestingly, here Honorable Supreme Court of India restored the assessment order passed by the EO and uh, and set aside the orders of High Court as well as ITAT, right? So that assessing officer must be very happy, right? It's a big thing that Supreme Court is restoring the order of assessing officer and setting aside the orders of High Court as well as ITAT. So let's understand the situation, what went wrong, what was the actual dispute before the Honorable Supreme Court. Let's understand it with an example. See, this is the balance sheet of a partnership firm, liability side and asset side, right? For example, this partnership firm has two partners, Mr. P and Mr. Q, right? Having capital account balances of 5 lakh, 5 lakh each, right? And on the asset side, this partnership firm have fixed asset as land and building that values 10 lakh rupees, right? So one day this partnership firms revalue its land and building from 10 lakh rupees to 1 crore, right? And so this revaluation leads to increase in the value of land and building from 10 lakh rupees to 1 crore. So there is an increase of 90 lakh rupees in the fixed asset, that is land and building, right? And correspondingly, the revaluation surplus got credited into the capital account of the partners, and the revised capital balances of the partners would become from 5 lakh to 50 lakhs, right? Now what happens is, after this revaluation, two new partners enter into the partnership firm. Let's take for example Mr. R and Mr. S enters into the partnership firm, right? Mr. R and Mr. S, right, brings in 1 crore in the partnership firm, right? Mr. R, Mr. S brings in 1 crore in the partnership firm. Then that amount, right, is to be given to Mr. P and Mr. Q, right? And this is how the capital balances of Mr. P and Mr. Q got discharged. And after that, Mr. P resigned from the partnership and Mr. Q also resigned from the partnership. They both resigned, right? And R and S as a new partner admitted into the partnership firm, right? And the land and building remain in the balance sheet of the partnership firm at the value of 1 crore rupees, right? So what happened in the entire scenario is that earlier this partnership firm was controlled by two partners as P and Q. Now, after admission of new partners and resignation by the old partners, now the partnership firm got controlled by two new partners, that is Mr. R and Mr. S, right? Indirectly, the land and building that has value of 1 crore rupees earlier was controlled and owned by, indirectly, through a partnership firm by Mr. P and Mr. Q. But now existing position in this example is that this land and building is indirectly now owned by Mr. R and Mr. S through partnership firm, right? So what happened in this example is that the ownership of the land and building got changed. Earlier owners were the P and Q, and the new owners are Mr. R and Mr. S, right? So the ownership got transferred indirectly through the use of partnership firm, right? So in this scenario, these transfer will not going to attract any income tax as well as not any stamp duty. If it could be a normal transfer transaction, then it would definitely attract income tax and it would also attract stamp duty. So Honorable Supreme Court of India has observed this, that how people use partnership firm, importantly the builders, the developers, all the one who hold real estate, right? How they use structure of partnership firms and they evade taxes, right? That's why Honorable Supreme Court of India restored the order of assessing officer that no, we cannot let this tax to go away, right? We have to tax this transaction, right? And the important aspect of this Honorable Supreme Court of India is that the Supreme Court of India says that revaluation of a fixed asset in itself and crediting the revaluation reserve to the partner's capital account is a transfer, and that transfer falls into the definition as prescribed by section 45(4), that it is a transfer and it attracts taxability, right? So I hope you all understand this example. So let's proceed. Now, what section 45(4) says, right? Let me clarify this, that this judgment on a partnership firm was for and relevant for the amendment that happened in 1st April 2021, right? So the Supreme Court judgment is not applicable after the amendment, that is 1st April 2021. So we need to understand that what was the pre-amendment scenario and what is the scenario after amendment, right? So before amendment, section 45(4) says that the profit and gains arising from transfer of capital asset by way of distribution of capital asset on the dissolution of a partnership firm or other AOP or BOI or otherwise, Supreme Court has picked this or otherwise. So Honorable Supreme Court of India said that it is not mandatory that the partnership firm has to be dissolved. It is not mandatory that some changes should happen, right? So it is clearly mentioned as or otherwise in section 45(4). So revaluation of a fixed asset and crediting that revaluation into the partner's capital account falls in the category of this or otherwise part of section 45(4). So it is treated as a transfer and capital gain will attract on this transaction accordingly. So this is what the Supreme Court says. Now let's talk about after amendment scenario, right? The after amendment scenario, 1st April 2021, right? Income tax department also concerned about these nature of transaction because there were a lot of judgments of ITAT and high courts that said that this is not a transfer when it comes to a partnership firm, right? So law was amended way back in 1st April 2021, and importantly the amended section 45(4) says that, right, that when a specified person, who is a specified person, here is partner of the partnership firm, right, receives, right, during the previous year any money or capital or both from a specified entity. Who is a specified entity? Specified entity here is partnership firm, right? In connection with the reconstitution of such specified entity, then any profits or gains arising from such receipt by the specified person shall be chargeable to income tax as income of such specified entity under the head capital gain or usko, and to calculate that capital gain there is a methodology given in the section 45(4), and the crux of that calculation is that the amount which is in excess of the capital balances of the partners is to be treated as capital gain and tax is to be payable by the partnership firm in that transaction, right? Now what is the actual difference between the pre-amendment and post-amendment transaction was that pre-amendment actually specifically do not talk about when the transfer will happen, tax will be attracted, right? Clear? And when we connect Supreme Court order with this post amendment is that let me explain you this, that Supreme Court order says that revaluation of fixed asset is to be treated as transfer, right, irrespective of payment or withdrawal, right, irrespective of payment or withdrawal by partner of the firm, right. If revaluation is done and credited to the partner's capital account, then it is to be treated as transfer and tax gets attracted on that transaction, right. But the post amended situation is, after amendment, the post amendment situation is the amendment that happens after 1st April 2021. It says that we also tax this transaction, but we will tax it when any amount is received by the partner of the partnership firm. At that point of time, we will tax it, right? But before amendment, it was not a clarity that whether it will going to taxed or not. So it was a disputed area and the matter got escalated to Honorable Supreme Court of India. And Supreme Court of India said that it is a taxable event, it is a valid transfer, fall under the category of capital gain. So tax is now attracted on this transaction. So now what are the consequences of this Honorable Supreme Court of India is that, right, those partnership firms who revalued their assets, right, prior to 1st of April 2021, right, they may receive notice for reopening under section 148 and their case may be reopened, right, on the basis of this Supreme Court of India judgment. Why I'm talking about those cases which are prior to 1st April 2021 amendment? Because the post 2021, post 1st April 2021 amendment already have provision in place which tax these kind of transaction, but the taxation will happen only when the amount is to be received by the partner of the partnership firm, right? So this is the connection between the judgment of Supreme Court of India, section 45(4) pre-amendment, section 45(4) post-amendment, right? So this is the important aspect of this Honorable Supreme Court of India judgment, and this is the important analysis which I shared with all of you in this video. So thank you very much. If you wish to have the complete copy of judgment of this order of Supreme Court of India, then you can comment your email ID in the comment box. Thank you for watching this video. Please like this video and subscribe to the channel. Thank you. Thanks a lot. Bye.